Welcome back. In today's video, we're going to be exploring MicroStrategy, now rebranded to Strategy, as they are continuing to acquire as much Bitcoin as possible through debt issuance, stocks, shares being sold on the open market, and many other different ways to acquire debt. That way they can buy more Bitcoin. When I'm recording this video in the middle of 2025, currently they own 528,000 Bitcoin. And their dollar cost average price on this Bitcoin, you can see right here, is about $67,000. And so we're going to be exploring, is this a risk? Because more and more people are starting to wonder whether strategy holders might be at risk from Michael Saylor's financial wizardry. But we're also going to be discussing why, even if you don't hold MicroStrategy, and even if you're not even exposed to MicroStrategy or Bitcoin, you can be affected by MicroStrategy's moves in the market, and the entire market can be affected by what MicroStrategy does and what they're required to do as a publicly traded company. And so we're going to be exploring all of this in today's video, and hopefully you guys enjoy these type of videos. So make sure you guys are subscribed to the channel. That way you never miss a new video. We upload almost every single day to bring you the latest happening in the financial world. And give the video a free thumbs up, because debt is not free, crypto is not free, MicroStrategy is not free, but thumbs up, yes, they're always free. So let's get right into it, and we're going to start right here. So it says strategy holders might be at risk from Michael Saylor's financial wizardry. So, we've talked before about some of the risk involved here. Now we're starting to hear a little bit more about it. To the casual observer, the company seems to have a magic unlimited pool of funds from which to draw to buy more Bitcoin, but Strategy acquired a sizable chunk of its stash of Bitcoin by issuing billions of dollars in equity, meaning stock, and convertible notes, which are debt that can be converted into shares at a later date. And more recently, via the issuance of preferred stocks, which is a type of equity or stock that that provides dividends to investors. And so we've covered this in a previous video. It's called STRF. And this is a way for MicroStrategy to get more Bitcoin by issuing more debt through this new channel that also gives dividends to investors. But let's just be clear. The dividend amount right now would be about $50 million a year, because I think they're giving 8 to 10%. So they raised about $500 to $700 million, and they're going to be basically paying out $50 million a year. How are they going to pay out that $50 million a year when this new product is not a cash flowing business? That's a very interesting question. So let's break it down, what this new strategy is doing is. And this is from Jesse Myers, who is a Stanford MBA, making slides about Bitcoin. It's an interesting job. Anyway, Saylor's huge new move is STRF. Strategy is a pump designed to accelerate capital flow from the bond market, the debt market, into Bitcoin. This is how Michael Saylor will source $3 trillion of bond market capital to buy Bitcoin. And so he said the bond market is 2% convertible debt and 98% ordinary debt. To date, Strategy has sourced capital via individual convertible notes. Now they've added STRK to streamline convertible note offering, and STRF to tap into the $300 trillion of capital in the broader fixed income market. Interesting strategy here. He said, don't believe me? Listen to Saylor tell you this. There's $300 trillion of fixed income, so I want 1% of it. He's thinking about this graphic. It's why he shows it in every presentation. Now, it is interesting what he's doing and what MicroStrategy is doing in general. Remember, Michael Saylor owns 0 MicroStrategy stock. He doesn't own any of it. He only owns Bitcoin, from my understanding. He sold all of his MicroStrategy stock over the last few years. And so what he's doing for MicroStrategy, he may actually be just doing for Bitcoin. Because if MicroStrategy is able to get debt and turn it into Bitcoin on their share, right? So they're saying, okay, I'm going to buy Bitcoin, which generally speaking over the course of time will continue to go up because it's anti-inflationary and it's opposite the dollar and most fiat currencies, which are inflationary. So if you understand that metric and believe that it's going to continue at least for the foreseeable future, then you can understand if you're taking out debt and issuing shares, whether now or in the future through convertible notes, and you're issuing shares, and then you're buying the underlying asset, which is going to appreciate, and the stock will appreciate hopefully in line with the underlying asset and maybe more due to fluctuations in the price and premium to the NAV. This could create even more opportunity to sell more shares onto the open market, then buy more Bitcoin, and effectively you're pumping the price of Bitcoin by continuing to buy, and you're continuing to buy because the price of Bitcoin continues to go up, which allows you to get more money through your stock offerings. And then you think that the dilution would affect it, but then you're buying more Bitcoin and the price of Bitcoin goes up. So it's kind of like this circle of prosperity, but there's a lot of risk there because if that stops or the debt comes due or the price of Bitcoin goes down, this could cause some issues for a publicly traded company and therefore the rest of the market. Because what happens in MicroStrategy with 500,000 Bitcoin, it's going to affect every other crypto in the market, every other crypto. And we'll get into a little bit of that in a few minutes. Let's listen to what Michael Saylor says here. This is a 3-minute video, so we'll play it at 1.25 speed, but we're going to kind of just let it roll. And don't forget to give this video a free thumbs up and also hit the subscribe button. That way you never miss a new video. And let me know your thoughts down below on this whole MicroStrategy situation. Is it safe? Is there risk? What do you guys think? Let's listen in.
Bro. Our growth rate's really only limited by our ability to raise capital. And so in the first 3.5 years after we adopted the Bitcoin standard, we raised about $6 billion of capital. And then in the first 3 quarters of 2024, we raised about $4 billion in capital. And then in Q4, we raised $18 billion in capital. And in the first 2 months of this year, $5.2 billion in capital. So we're doing this. Our plan will be, to raise capital this year, equal to or what we did last year. And if we can go faster, we'll go faster. And the ultimate goal, look, we're tapping into the fixed income markets. There's 300 trillion of fixed income. So I want 1% of it. So like, could I raise $100 billion, $200 billion of capital? Sure, I could. And if we raise hundreds of billions, then we'll buy Bitcoin with it. We'll have 500 billion of Bitcoin and the market cap of the company will be 2, 3, 4x that. And then we'll be doing it. Our goal will be to keep growing 20% a year. So the growth rate of the company is the Bitcoin growth rate plus our capital growth rate. So Bitcoin's been going up 60% and we're 95% each year by levering. If we stopped raising any capital tomorrow, we're a $50 billion company growing 30 to 60% a year.
Now I'm going to pause right here. Some of this is going to get confusing. As long as you kind of overall understand the gist, we're going to play the rest of it in a minute. But effectively, this is where the risk comes in because they're buying it and the price of Bitcoin is going up because they're buying it. But if they stop buying it, and right now, no other institutions really are buying Bitcoin. They're just not buying it. And MicroStrategy is the only company that's actually purchasing Bitcoin and taking out debt to buy Bitcoin. Now, you could say the Bitcoin mining companies are as well. They are, but they're not doing it as much. And also, that's a risk as well. I mean, you have Bitcoin mining companies literally buying the top of the market when they should be selling the top of the market, right? They make Bitcoin. They should not be holding for the long term, especially when they are going to need some of that for their operating capital. But anyway, that's a whole different story. Majority of companies, I should say this, there are basically no companies doing what MicroStrategy is doing. And I don't think that any of them are going to for the foreseeable future. They're all just watching what MicroStrategy is doing. Can MicroStrategy make it through a bull and bear market cycle with all this debt, right? And that a lot of that is what we're going to be talking about a little bit further into this video. But I really wanted to break down what these new products that they're using to create more debt to buy more Bitcoin. Because now Saylor is tapping into so many different areas of debt issuance to buy Bitcoin. And this is either the most genius plan or maybe the opposite. Anyway, let's continue listening in.
if we stopped. But we're not going to stop, because the least risky, most constructive thing for us to do is to go sell 10 billion or more of a convertible preferred, go sell 10 billion or more of a fixed income preferred, continue to be the biggest issuer in the convertible bond market. And then if we ever need to delever, just delever with the equity. And so we will go as fast.
He said delever with the equity. That means selling stock on the open market. So everybody is getting diluted from this in the MicroStrategy ecosystem, except for Bitcoin holders. And if you think about what Michael Saylor's doing, I mean, he owns zero stock in MicroStrategy. He only owns the underlying Bitcoin. So it doesn't matter what happens with the stock. It matters what happens with Bitcoin.
Fast as the capital markets allow us. And the challenge with the capital markets, right, is the capital markets will open and close on a dime. Like, after November 5th, right, we sold $15 billion of equity in 6 weeks, and the stock was trading up and the premium was expanding, right? And then all of a sudden it closes. We're like, oh, last week we sold nothing. And the convertible bond market, it opens and it closes. And now our real focus with these IP.
So what Michael Saylor is also saying here is what their strategy is. When there's a premium to where their stock is trading based on what they're purchasing in Bitcoin, they sell more of their shares on the open stock. And as soon as that premium goes basically back to zero, they stop selling those shares on the market because they don't want to get negative, negative NAV for what they're taking out in debt. So they're literally telling you they're going to sell the shares on the open market when there is a premium. So you as a holder of MicroStrategy, in my view, should be doing the same, because all they're doing is diluting the shares. And again, a lot of that is temporary if you're thinking about the longer term strategy with Bitcoin itself. And this is where Michael Saylor wants you to understand there is a risk side to it. But the upside is that there technically will be no risk in the long term. At least that's what he's alluding to in my understanding of what he's saying here. Let's continue listening in.
IPOs of like Strike is to just open up. You could think of it as like a proprietary fixed income ETF. We're just going to open that up and we're going to sell it to fixed income investors. And then that will grow at whatever rate the market gets educated. And there's just a lot of education of the market about the credit risk of Bitcoin and the appeal of credit. I think that our instruments ought to be investment grade. We're 42 times over collateralized on our senior convertible bond, and it trades with a credit spread of 500 basis points. It ought to be 25 basis points. So we've got to educate the banks, the credit rating agencies, the big fixed income investors. That's going to take time, but it's a worthwhile mission. It's kind of fun.
So there you have it. So here are the key details of the STRF or Strife announcement. This is a fixed income offering packaged as a preferred stock offering in order for strategy to easily and continuously raise capital to buy Bitcoin. What's with the name perpetual strife? It's not a finance term. Saylor is giving a huge wink to Bitcoiners with the concept of speculative attack. So what is strategy? What's the strategy here with the perpetual strife offering? It's not a normal term in corporate finance, a wink wink play on words. Offering is perpetual. Prior preferred stock offering was STRK or strike because of convertible note element with a strike price. Strife, on the other hand, is a nice adjacent word with extra meaning. It evokes speculative attack on the bond market capital. Effectively, they're speculating on the bond market, saying the bond market is free money effectively, especially when you're buying a hard asset with it, right? It's the same thing like buying a home with debt. The home has value, regardless if you live in it or not, regardless if you can pay it or not, it has value. So if the bank takes it back, they can still sell it and get at least some of that debt back. The same thing is going on with Bitcoin here. So Jesse continues saying the design of Strife is clear. This is intended to be irresistible to fixed income portfolio managers, a higher percent annual dividend than Strike in exchange for no embedded call option. And so effectively, they're going to be giving 10% annually. And so you can make more here than you can make in traditional debt offerings. What remains to be seen is, will it be priced like Strike? Okay, whatever. How much demand will be there? Well, we've already seen quite a bit. Um, and when we're going to see this kind of expanded to $3 trillion. He says strategy is a pump designed to accelerate capital flow from the bond market into Bitcoin. Here is a summary of this whole thing. You guys want to watch, and we'll kind of
Strategy just launched
discuss as
Strife.
well. Let's
This
do
is
it.
their latest product.
And by the way, hat tip to
Strategy
Jesse
just
Myers
launched Strife.
for
This
this
is their
real
latest
good
product
explanation
offering.
on everything going on with MicroStrategy. And don't forget to give the video a thumbs up and go follow Jesse over on X.
Strategy just launched Strife. This is their latest product offering, and I think the key to how they're going to get $3 trillion out of the bond market to buy Bitcoin with. Let's hear about it from the man himself.
Okay, we already saw this, so we're not going to play all of that.
Offering previously, they were thinking about how do we expand our access to the bond market. That was just to get convertible notes. Now STRF is for the full bond market. So what is this? Well, this is the launch of this product. This is a Series A. They're starting small, just 500 million. This is a fixed income pure play. So the whole point here is to repackage what an ordinary bond would look like into a dividend yielding preferred stock offering. And the idea here is that it's each share will receive a $10 per year dividend.
This is how I got to the $50 million a year dividend for the whole thing. $500 million in the initial, total is $10 per share, or 10%. 10% of 500 million is $50 million a year. Where are they getting the money for that to pay out from the dividend? Well,
and that could mean 10% interest effectively for the holders, or possibly more. The name is really interesting. So perpetual Strife preferred stock offering. Perpetual Strife isn't a term in finance. So this is a play on words, because they had previously named the STRK offering Strike because it has a strike price as part of the convertible debt portion of it. And then they just picked this word Strife because it's kind of a nice adjacent word, but it has this extra meaning, right? Perpetual Strife. This is a speculative attack on the bond market. This is what Saylor is doing. It's a big wink to the Bitcoin community. Here are the details. The key is that this is higher interest in the form of dividends than the STRK offering, 2% higher. That was 8%. This is now 10%. And in exchange, you no longer get the convertible debt call option embedded into it that the STRK offering has.
So the big issue here is that a lot of people are concerned that what they're doing is they're creating more debt to then go and pay off other debt, like these dividends or like the interest on the other debt. Now, whether they are or not, I don't know. A lot of this is going to be, we're going to have to find out throughout time and see kind of how this all plays out. But the other issue is, what is strategy going to do if Bitcoin goes below their average acquisition price, which you can find on their website, strategy.com. And if you click on purchases over here, you can see their average cost for all their Bitcoin is about $67,000. So what happens if we see a big swing to the downside? So the founder of crypto hedge fund Lecker Capital told CoinDesk it's highly unlikely that we would see a result in a scenario where strategy has to liquidate a bunch of Bitcoin because it gets margin called. For the most part, the debt is very likely to be able to be refinanced for the convertible notes. And then strategy started issuing the perpetual preferred stock, which never has to be repaid. We just kind of talked about that. The perpetual, it goes on and on. In other words, not only is there very little chance that strategy could suffer this kind of blow up that shook over crypto firms back in 2022, Genesis, 3 Hours Capital, Genesis Trade, all the major firms, right? But the firm has even refrained from posting its Bitcoin holdings as collateral for loans, with the exception of a loan taken from Silvergate, which was repaid in 2023. Even so, that doesn't necessarily mean that it's blue skies ahead for MSTR investors, because under various scenarios, Saylor could be forced to issue more equity than the market can handle in order to maintain course. Remember, back in January, MicroStrategy shareholders approved increasing the total number of shares from 300 million to 10 billion, which is a 30x, right? So we just heard from Michael Saylor in this video where he basically said that that they're going to sell their shares on the open market when there's a premium. But what if the share price goes lower than what they're the business is worth with the Bitcoin. That could be a big issue. And if they have to keep selling shares to maintain buying or maintain their business and maintain all these dividends, this could cause mass panic in the markets, right? He's this guy from the crypto hedge fund. He said if he's not paying dividends with Strategy's cash flow, right, with the company's software business cash flow, he's going to issue more shares and wreck the stock price. But it's no different than what he's doing already. Every time the retail bids it up, he wrecks the stock price by issuing more shares. In the future, he will have to do that. And the flows might not go into Bitcoin. They might go to repay these debtors. And that will hurt the share price. Completely agree. Basically, what he's saying is every time there's a premium, anytime he starts buying Bitcoin, people start, I'm long MicroStrategy, I'm extra long MicroStrategy. I mean, there are groups on social media where people are literally, their entire portfolio is in MicroStrategy. And I'm looking at them, I'm like, what the F are you doing? Like, why don't you just put it in Bitcoin, right? If you believe in MicroStrategy's strategy, put it in Bitcoin. Because what happens is, Michael Saylor said it. I showed you a video just a few minutes ago. The minute retail bids up this stock, Michael Saylor's on the open market selling the stock. He has 30x what, I mean, I don't. We can do the math right now, but it's still around 300 million shares outstanding, maybe a little bit more. I think last I checked, it was 240 million shares. So it's probably around 250, 300 million shares. They could sell up to 10 billion shares, right, on the open market. And so anytime your stock goes up, if you're in MicroStrategy, anytime the stock goes up, it's going to be pulled back down. Maybe not immediately, but it will be pulled back down by MicroStrategy themselves. So why would I hold the stock when I can hold just the Bitcoin? And keep in mind, guys, just the fear of this happening, just the fear that MicroStrategy will have to sell to pay their dividends or to pay back the debt, even if they refinance the debt, that will still cause fear. The fear itself can push the price of MicroStrategy down or the price of Bitcoin down, which in turn will push the other price down. So for instance, if Bitcoin starts going down because people believe that MicroStrategy is going to start selling their Bitcoin, even if they're not going to do it, even if they come out and say, we're not going to do it, but if there's fear, Bitcoin price drops. Then if it goes below that $67,000 price and there's more fear, price is going to go lower. And then MicroStrategy's price is going to go lower. And then people are going to be like, oh shit, we're below the dollar cost average. MicroStrategy is going to have to liquidate. And then the MicroStrategy price can go down. I mean, there is no bottom. There is no floor besides $0, right? And if they do sell for any reason, fear will overtake the market and people will just sell, and it will cause liquidations, and it will go further down, causing more liquidations, going further down, causing more liquidations. And that will push the MicroStrategy price down, all of the preferred stock price offerings down. I mean, it could be catastrophic. And again, to the title of the video, MicroStrategy can crash Bitcoin, MicroStrategy can crash your stock, it can crash your altcoin. Because if Bitcoin starts cratering due to the fear, just the fear alone, this could push down all the rest of the market. And even if it's just a false dump because MicroStrategy doesn't sell, the fear alone about what MicroStrategy will do or will have to do if they can't pay this debt or if they can't pay the dividends or whatever, just from their cash flow, this could be a huge issue, a huge issue. And so we have to kind of watch what they're doing. Because the other thing is, even if they're not selling the shares on the open market, convertible notes can convert to shares now or at some point in the future. Convertible notes have allowed Strategy to raise funds quickly without diluting MicroStrategy stock because they're not issuing the shares yet. They're issuing them at a future date when the debt comes due or when the stock price hits a certain price. Typically, investors like these, because they offer solid yield, they benefit from stock surges, and they can usually redeem in cash for an amount equal to the amount of the original investment in addition to interest payments. The tremendous volatility of Strategy's convertible notes has allowed the company to mostly issue them at 0% interest rate and still meet high demand from sophisticated market participants who make bank trading that volatility. Finally, strategy has begun deploying preferred stocks, which we just talked about. But why is strategy issuing all of these different types of investment vehicles? The idea is to create demand for strategy for all kinds of investors that may have different tolerance to risk, according to one analyst. The other thing is what we just heard MicroStrategy's Michael Saylor say. When they have all of these different products, they can tap into different types of debt when it is beneficial to strategy. For instance, if the price of MicroStrategy premium is not very high, but they keep selling shares of the stock price is going to keep going down. So when the premium is not very high with MicroStrategy, they say, okay, we're not going to sell any more shares on the open market. We're going to go to the perpetual convertible notes or whatever, Strife or Strike, and figure out which one it makes most sense to buy into. It's kind of like shopping around for debt. Same way you shop around for a good mortgage rate or a good car rate or a good car, right? It's the same thing here. That's what MicroStrategy is doing. They're doing this very strategically. But a lot of people are not looking at the risk, right? Again, would I rather own MicroStrategy or Bitcoin, right? Because you have to remember, there's also a lot of products built on top of MicroStrategy. So you have MicroStrategy options, you have MicroStrategy futures, you have MicroStrategy leveraged MicroStrategy products like MSTX or MSTU. You have short products like SMST. You have yield generating products that sell options on the open market like MSTY, Yield Max. So you have all these derivatives built on top. And now you have the debt instruments and probably derivatives being built on top of that as well. And so you have all of these points that can fail or that can draw down the price and then accelerate the drawdown. So if the price of Bitcoin just starts going down and then people start betting against MicroStrategy in the derivative markets, this can push the price of MicroStrategy even further lower than where it fundamentally should be. That could cause ripple effects to Bitcoin. And then when Bitcoin goes down, what happens? The rest of the market catches a cold when Bitcoin gets the flu, right? So when that happens, everything else craters and all the liquidity gets pulled out of the market because not only the price is going down, but then people get liquidated on over leverage, and then that liquidation causes more drawdown in the price, and then more liquidations, and then more drawdown and more liquidations, and it just becomes a domino effect, and everything it gets affected by that. And so one analyst said strategy's capital structure is almost like a seesaw and a playground. The common shareholders and converts are on one side, and the preferred equity holders are on the other side. As sentiment shifts, the weights move around and it tilts the value between these securities. But now, no matter how the seesaw moves, it's a total weight, which is strategy's enterprise value, which remains the same. It's a redistribution of people perceived value across the liabilities that exist on the company's balance sheet. Absolutely. And then the risk, right? Even so, strategy now finds itself in a situation where it must pay 8% dividends on Strike, 10% dividends on Strife, and a blend of 0.4% interest rate on convertible bonds. The strategy software business providing very little cash flow, finding the funds to pay for these dividends can be tricky. And so where are they going to get the money for it? Thompson said, one of the analysts said, it will hurt the share price. In the most extreme scenario, the stock could trade at a discount from its Bitcoin holdings because he would be having to issue shares to pay interest to cover the cash flow. The really draconian scenario would be a discount would get so wide, like 20 or 30%, like we saw with Grayscale's products prior to ETF conversions. Guys, previous cycle, I told you guys, in 2020, I made more money on Grayscale products than I made in any other product because of this the premium to the NAV or the discount to the NAV. I was buying when it was in a discount, selling in a premium. I was doing the same thing that essentially MicroStrategy is doing, but on the opposite end, right? I was taking profits, they're taking debt. The shareholders riot and tell them to buy back shares and close that discount. Right now, Michael Saylor is adding shareholder value by selling the stock at elevated prices and buying Bitcoin. But in the future, the reverse might be true, where the best way to add shareholder value would be to sell the Bitcoin and buy the stock. But that's quite far away, according to this analyst. And so another point of risk for holders is these other things that I was just talking about, right? These leveraged products like the 2x long strategy exchange traded funds, MSTX and MSTU. We just mentioned that. These have seen weirdly persistent demand despite the stock's drawdown. Every time investors want to gain or increase their exposure in these ETFs, the issuers have to buy twice as many MSTR shares. The popularity of ETFs has helped create constant buying pressure for MSTR. So far, they've accumulated over $3 billion in MSTR exposure between these two products. And so everybody's still long MicroStrategy. And I'm becoming more and I still own MicroStrategy products, but I'm becoming more bearish as time goes on, right? I do think that we're going to see another pump in the market. And I think it's going to push a lot of Bitcoin proxy stocks to new record highs. But the risk remains. And the risk does not mean cratering or bad. It just means it's something to keep an eye on. Because if you understand what the risk could be and you start to see the risk playing out, you can get out before everybody else, right? Because once the market realizes that the risk is occurring, right, or executing, it's worst case scenario, everybody's running for the door at the same time. And so this is why you have to be ahead of the markets, ahead of where these things are going. That way you can be ahead in your portfolio, right? So one of the analysts said, I don't know where the endless capital comes from buying the dip. These ETFs have gotten obliterated. They're down huge. Some of them are down like 90%. That is true. He said, I mean, it's not a structural move up in the demand curve that you should count on. It's something that you should really bake in your 10-year predictions of Bitcoin price. But as long as it's existing, it's important for Bitcoin. So he said he's continually amazed by it. And it's really MicroStrategy as a whole. Very interesting strategy that they're doing. It's already created millionaires. It's going to create billionaires, not just MicroStrategy, but Bitcoin in itself. But we have to understand the risk, because if we're not risk managing our portfolio, what are we doing, right? People are, well, we don't really need to focus on risks. Like you have car insurance, right? It's risk mitigation, right? You have home insurance, risk mitigation. You have to have risk mitigation in your financial portfolio. And so understanding these risks can help you understand whether MicroStrategy is or is not a good investment. I can't make that decision for you. You have to make that for yourself. I do own MicroStrategy and MicroStrategy products. I have traded them as well. Are these long-term holds? It depends. Like I said, like, why are you in MicroStrategy stock when you know that Michael Saylor is going to sell the shares as soon as the price goes higher? Why are you going to be in it when you know that it's covered in all this debt? When you can be in Bitcoin, again, I still own MicroStrategy, but I still have these kind of differing opinions in my own thesis, is that Michael Saylor doesn't own Bitcoin. MicroStrategy is a lot of risk in their Bitcoin strategy. Why don't I just own Bitcoin? There's not as much risk there. And if MicroStrategy goes up, it's going up because Bitcoin's going up. So if I just own Bitcoin, I feel like there's less risk than in MicroStrategy. MicroStrategy, there's existential risk in the company if there's a big issue with Bitcoin. If Bitcoin goes to $20,000, what is MicroStrategy going to do? What are they going to do? That's a big question. Maybe we'll find that out. Maybe we don't. We won't. It depends if Bitcoin goes to $20,000 again. But hopefully this kind of broke everything down for you guys. We kind of talked about some of the risk involved. Is the price of MicroStrategy going to go up over the course of time? Of course, because the Bitcoin underlying is going to go up, and they keep buying Bitcoin with the underlying stock. So another company that's, say, where they're creating debt or selling shares on the open market to raise money, if they're just using that money to pay employees or to pay their rent or to grow, build out another facility for whatever their business is, that takes time to grow value. And when you look at MicroStrategy doing all of that just to buy the hard asset underlying, at least there's value immediately there, because we know that Bitcoin has value. And then if it's going to go up, we know it will eventually, over the course of time. Will it go down? Well, we have to understand MicroStrategy is also buying the top of the market. Are they going to continue to buy the top of the market? Or are they going to start buying the dips and the lows and sell some? I mean, I think that they should be selling some at the Pico top. That way they can repurchase at the bottom, or just pay off all their debt and wipe it clean. I mean, imagine MicroStrategy wipes their debt clean and they still have 400,000 Bitcoin or 500,000 Bitcoin. That would be amazing. So we'll have to kind of wait and see. I'd love to hear what you guys think about this. Don't forget to give the video a thumbs up, hit that subscribe button, and let me know, are you holding MSTR or any of their products, and how bullish or bearish are you on this stock? Let me know down below. I'll see you guys when I see you. Crypto on.